I take a live look at some container ships in the San Francisco Bay Area, just some of the many shipments that come into the U.S. every day from our trade partners all over the world. Now, this all comes as President Trump put tariffs on goods from Canada, Mexico, and China. Now, with those tariffs taking effect, let's take a look at how the Dow is doing. The S&P 500 now down 2% for 2025, and the Nasdaq Composite Index is in correction territory. Investors are fearing a trade war, and Americans are wondering what this means for their 401ks. Among other big financial decisions, let's bring in Eric Diton, the president and managing director of the Wealth Alliance. Eric, thank you for being with us. Walk us through what's happening right now in the markets. It's pretty scary, and how it's all connected to Trump's tariffs. I'm telling all my friends, do not look at your 401ks.
Well, it's interesting. We're just about 5 years later from COVID. And 5 years ago, the stock market dropped about 35% in 5 weeks. 401ks plummeted. And quite frankly, there was nothing good in the horizon. It was every reason to sell out of stocks. We looked like we were on the verge of a global depression. If you locked in those losses, it was brutal. You could not recover from that. So the first thing is you don't panic. You stay calm. Now, I don't know why anyone's surprised. Donald Trump, the whole time he was running for president, said, I am going to institute tariffs. And everyone's saying, oh my God, he said he was going to do it. Let's be clear. Donald Trump is not a politician first. He's from the business world first. His goal is not to destroy the economy. He definitely does not want to do that. In fact, he's very, very connected to the stock market. He's that guy. But he is a ruthless negotiator. And even though he wants the stock market to do well, he does not mind short-term pain to achieve his results. And so that's where we're at. There are tariffs. They are painful. We're just starting. I think it's going to get uglier. But to try to actually decide when this is going to bottom, how this is going to turn, I don't think Donald Trump knows exactly what he's going to do yet. And we certainly do not. What we do know, at least I believe, is that the tariffs against Canada and Mexico, I don't believe they're permanent. I think these are negotiating ploys. I think China is a different story, a major competitive threat. And I think those tariffs could really stick for the foreseeable future. The bottom line is have faith in the system. Know that the president's not trying to destroy the economy.
Okay, that's an interesting take, because I want to talk about this. One of the largest retailers in the U.S. weighed in on what Trump's tariffs will mean for prices in the grocery aisle, which was a lot of people were concerned about leading up to the election. And in an interview with CNBC, Target CEO Brian Cornell said, quote, the consumer will likely see prices increase over the next couple of days. If there's a 25% tariff, those prices will go up. So, Eric, tell us more about how quickly these tariffs might trickle down to American consumers. I mean, it sounds like we're going to start feeling the pain pretty quickly.
Yeah, and this is an unfortunate part because, as we all know, we've been combating inflation now for a couple of years, and the consumer has been struggling. So a tariff, make no mistake, and by the way, I'm not a fan of tariffs, but a tariff is a tax. It's an out-and-out tax on goods. The importer pays it, and they've got to pass it along to the consumer or they're going to get crushed. So yes, I think in a relatively short period of time, probably a few weeks, you will see higher prices translate to the consumer. And that is, again, short-term pain. And that's why you're seeing the bond market is rallying, yields are coming down. That means the bond market is seeing a slowing in the economy. It's the reverse of when rates were rising before and the economy was booming. And so this probably will slow economic growth down, at least in the near term.
All right, Eric Diton, thank you so much for that insight.